Good morning. I'm Peter Milios from the Finance News Network. Stocks rose Friday after a volatile trading session. Although the session began with fears that the banking crisis was spilling over to Deutsche Bank, the markets rebounded to end the week on a higher note. The Dow Jones Industrial Average gained 0.41%, the S&P 500 rose 0.6%, while the Nasdaq Composite ticked up 0.3%. The major indexes all had a winning week, with the Dow gaining 0.4% week to date as of Friday afternoon, while the S&P 500 and Nasdaq gained 1.4% and 1.6% respectively. One factor that helped the bank was a bounce back in regional bank stocks. The sector rallied on Friday, with the SPDR S&P Regional Banking ETF gaining 3% during the trading session. Amid all the volatility, the KRE ended the week up 0.2%. A sell-off in Deutsche Bank US-listed shares Friday morning put downward pressure on market sentiment and the major indexes before the bank recovered some of its earlier losses. A sell-off of shares was triggered after the German lender's credit default swaps jumped, but without an apparent catalyst. The move appeared to raise concerns once again over the health of the European banking industry. However, many analysts were left scratching their heads as to why the bank, which has posted 10 consecutive quarters of profit and boasts strong capital and solvency positions, closed 3.1% lower on Friday, rebounding from a 7% drop earlier in the trading session. European Central Bank President Christine Lagarde tried to ease concerns, saying Eurozone banks are resilient with strong capital and liquidity positions. Lagarde said the ECB could provide liquidity if needed. And investors have been flocking to gold and treasuries as bank stocks have been whacked by the shuttering of Silicon Valley Bank and Credit Suisse's implosion. Gold has risen around 10% since early March, when SVB was hit by a bank run. Investors are closely watching the Federal Reserve's next moves of their impact on gold prices. And in commodity news, all eyes are on the copper price, which has been the best performing commodity this year. Goldman Sachs expects the world to run out of visible copper inventories by the third quarter of this year if demand in China continues to power ahead as strongly as it did in February. Metals analysts said that demand for copper has accelerated and been pushed higher by clean energy industrial policies in the US and Europe that rely on electrification. Sector-wise, interest rate-sensitive sectors were the best performers on Friday in the expectations that rates rises may be over for the time being. Utilities, real estate and consumer staples were the best performers on the S&P 500 on Friday. The SPY futures are pointing to a 0.04% fall. Thank you for listening.